Joining us now to discuss the crypto markets is Genesis Volatility CEO Greg Magadini. Greg, we are seeing a lot of volatility out there. BTC may be taking a breather or more pain ahead. What do you think?
Hi, Christine. Thanks for having me on. Yeah, absolutely. There's kind of two narratives going on right now. There's the macro narrative, which affects Bitcoin and cryptocurrencies and risk assets as a whole. And then we have the crypto-specific narratives, which is really centered around the ETH 2.0 merge tomorrow. So kind of looking at the macro scenario, we know that the CPI number came in super high. Jerome Powell has been very open about getting ahead of inflation expectations. He's very afraid of consumers having elevated inflation expectations. Yesterday's number is the perfect excuse for potentially doing a 1% interest rate hike next week at the FOMC, which would kind of surprise the markets, catch inflation expectations off guard, and hopefully tamp it down. He's been asked, are you afraid of hurting the economy? He said he's willing to take that heat.
Interesting. So actually, traders on the Chicago Mercantile Exchange started pricing in a 32% chance of a 100 basis point rate hike by the Federal Reserve in September. What's the impact on Bitcoin that might have?
Yeah, so when we look at Bitcoin, lately the correlation has been really in line with, say, tech stocks. So it's a high risk asset correlation. So the way that I'm thinking about it is, if we're going to sort of break the markets by raising rates high enough to tamp down inflation, then Bitcoin's going to go along with it. When we're seeing that $20,000 level, which is a pretty psychologically important level, the fact that we just can't hold above it, to me, isn't a very bullish sign. So as far as Bitcoin moving on macro risk, it's not looking too good in my opinion.
What's the bottom for Bitcoin in your view?
I mean, I think that the smart psychological number that everyone's looked at is 10,000. And the reason why that is because it's been such a significant level in the past. So 2018, 2019, like 10,000 was really a super significant level to sort of get above and stay above. So if we're actually going to have a big sell-off, that's a logical number that I think a lot of traders are looking at and a lot of people would be positioning around.
All right, the other narrative you spoke about was the Ethereum Merge. It's only hours away now. What is the impact that ETH will have on Bitcoin going in the future? Because we hear a lot about, speculation on what will happen with ETH, but what's its ultimate impact on Bitcoin?
Yeah, that's a great question. So really kind of moving back real quick, just around ETH itself, there's a couple things going on that are really interesting in the options market. So we're seeing a huge implied to realized differential, a variance premium. So right now, the implied volatility around Ethereum, call it options that expire in 3 to 7 days, is around 120% implied volatility, which is basically implying that from now until expiration, ETH is going to have a one standard deviation move of about $100 or 6%. So there's a lot of anticipation that this is actually going to move the ETH market. Now, if we get some sort of bullish move in the ETH market, that might be enough to sort of bring up Bitcoin. So I think these two big counter narratives are going against each other. So I would say, if we get something bullish in ETH, and it brings up Bitcoin, that's not necessarily everything's fine now, let's all buy crypto again. It might actually just be a great opportunity to take an out and downsize on your portfolio. With yesterday's CPI number, we saw a lot of traders sort of anticipating that we get a CPI print that would show that the inflation is more transitory instead of secular, and we didn't get that. And so with that narrative kind of behind us that this might not be transitory, I still think the macro narrative has to win out in the long run. We know that the Fed is super paranoid about inflation expectations setting in. So any sort of bullishness, in my opinion, is a great time to sort of take some risk off the table.
You also said that long-term interest rates are going to be greatly affected as ETH enables staking yield. Maybe you could walk us through that train of thought.
Yeah, absolutely. So that's a really interesting sort of derivatives niche that people should be looking at. So essentially what you can do with Ethereum is you can stake Ethereum, earn some yield on it. And if you want to take out sort of the delta risk or the price risk of Ethereum, you can go to Deribit and sell a future against your holdings and basically have a risk-free position in terms of price going up or down. So what's happening now is if I look at long-term interest rates in Deribit futures, say 6 months to a year out, they're about 1 to 2% negative. But the yield on Ethereum staking, it's going to be around 6-ish%, give or take. So now there's a potential opportunity for me to stake some Ethereum, earn some yield, sell the future, give up some yield, but take out the price risk and essentially net some sort of return. So I think that's going to be really interesting because interest rates are a pretty big input into the option pricing models and to the cash and carry of futures. So getting that interest rate assumption right is going to be a big profit and loss opportunity for some traders.